As we approach the end of the year, we take time to reflect on 2020 and explore the outlook for 2021. Today I'm speaking with Dominic Danos, Managing Director of the Danos Group. So the first question to you, what key 2020 recruitment trends have you seen in the compliance, risk and legal markets?
What we have seen is enormous resilience and robustness within the risk and compliance recruitment sectors in particular. As we saw in 2009, and then as we to a certain extent saw in around 15, and certainly this time around, we've seen that risk and compliance are the most resilient sectors outside of technology within infrastructure recruitment. I think that legal has had a recorrection. Legal has had 10 years of unprecedented growth from a recruitment perspective, predominantly on the private practice side, but also an element of growth from an in-house perspective. The legal sector of our three disciplines, legal, risk and compliance, was the hardest hit. But the good news is we have started to see positive signs over the last few months. Briefly summarizing Asia and America, I think Singapore has actually responded well. Hong Kong has obviously had a tough period, which is as much to do with political challenges as well as COVID-related challenges, and that has impacted upon the Hong Kong market. But what we've seen is therefore increased demand in the Singapore sector. And the US, again, has had a pretty resilient year. We've had our biggest ever quarter in the US, this current quarter that we're in now, and we have very good pipeline going through into the new year. So overall, obviously for our three sectors, I think we have been very fortunate. We've seen 3 of the quarters to date for the year have been in our top 5 in the 16-year history of our firm. So I think we're very fortunate to be in these very robust and resilient sectors. In terms of the trends piece, there's really, I think, 4 key interesting trends that I've seen over the course of this year. Firstly is we have seen double-digit attrition levels at the large-scale banking groups across risk and compliance in particular. Last year, attrition levels at these firms dropped below 10% for probably the first time for up to a decade. And I think a lot of these organizations expected that to continue to this year. Actually, their attrition levels have really escalated to the late teens and early 20s in some cases in 2020. Secondly, we've seen accelerated movement of the top talent moving from the large scale banking groups to niche, more nimble organizations. We've obviously seen a huge surge and growth within payments, fintech, crypto in particular. Third trend I've seen is the movement of top talent away from the UK. Back in 2009-10, we did see a slight drain of talent moving out to Asia. And that is certainly something we're seeing this time, but more to Europe than to Asia. And then last really interesting trend that not everybody would be aware of is the lack of buybacks from firms. When people resign, particularly at ED level, MD level, partner level, etc., large scale corporations would normally expect around a 30% successful buyback percentage. They'll be buying back 30% of people who resign. This has now dropped to below 5% this year. So I think that normal kind of company loyalty is much more difficult to maintain in a working from home environment compared to being in an office environment.
Would you say for the contingency side of the business, would there be less counter offers at a level up to potentially 80,000 as well as at the search side?
I think to a certain extent, I think that it will always apply. I think companies invariably are always going to buy back, probably focus their buyback attention slightly more on more senior level staff.
What opportunities have you seen in 2020 that offer relocation and living abroad?
we've certainly seen a significant increased demand movement of talent moving across Europe. First of all, we've seen a very high volume of Europeans living in London returning home. I think in particular, the most obvious example is Dublin. We were speaking to a number of clients recently in Dublin, and a large percentage of people moving back to the Irish market is Irish nationals returning home. And to a lesser extent, we've seen that in Germany as well. What we've also seen is there's increased demand across Europe for UK talent pools. Legal perspective, UK qualified lawyers are in record demand across all of these financial centres. And from a risk perspective, in particular, we're seeing a significant growth of the risk nearshoring hubs across Eastern Europe. This demand across Europe is challenging because there aren't always enough talent pools to be able to relocate. And we've got to think outside the box. And to give you a pretty extreme example, just this week, we've had offers accepted from a candidate in Chile and in Brazil for roles in Poland. So we've got to think outside the box in terms of reaching out to the relevant talent pools.
How is our client set incentivising candidates to relocate to different areas or different banking groups?
A number of the European financial centres have brought in tax incentives to try and attract good talent across Europe. Obviously, Luxembourg has had that in place for a while. Switzerland, Amsterdam have brought that in, Denmark, etc. So there's a financial incentive to bring these people across. And I think obviously a number of these hubs are then trying to work on making the move as easy as possible in terms of relocating family, children, integration schools, etc., and that being at the forefront of a relocation support package.
What benefits do you see in hiring a diverse workforce, and how are you looking to improve education around diversity and inclusion at Danos?
The vast majority of clients are now very focused on hiring from diverse talent pools. 67% of candidates say that a diverse hiring strategy is central to them choosing a new employer. 85% of CEOs will emphasize the fact that a diverse workforce contributes to a more successful company. Diverse businesses are 1.7 times more likely to be innovation leaders. The desire of the client to absolutely recruit from a diverse talent pool is very much there now. From an internal perspective, this is obviously something we take very seriously. I like to think that we lead from the front on this. Over 75% of our workforce are from a diverse background. We have a diversity and inclusion forum that meets frequently and is driving a huge series of agendas across the firm and subject matters and causes. I think from my perspective, what's critical is helping our clients with their strategy. Help our clients understand how they can attract the best legal, risk and compliance professionals from the diverse talent pools. We've been working with a lot of our clients on really a 3-stage process to really maximize the benefits from that. And that's very much around kind of assessment, education, and then execution in terms of diverse hiring strategies. As head of Danos Consulting, what trends have you seen in the interim and consulting markets this year?
This year's been a really interesting one. I think we went into it in March feeling quite nervous. I think only one out of a number of our contractors out working actually had any home working, and now they're all working from home. I think some of the sectors really struggled to adjust to people not being in the office, especially sectors like the private banking sector. But actually they've all kind of moved into 2020 and new times. I think we've been particularly busy in certain sectors We've been busy around kind of private equity. We've been very busy within the fintech and payment space. The larger banking groups have been quieter, but there's also been some bench support hiring for some of the consultancies. And in particular, we've been very, very busy around financial crime. I think the regulator is all over firms, and off the back of that, there has needed to be some interim support. And we are expecting probably an increase as well within the brokerage sector over the next sort of 3 to 6 months, especially around sort of surveillance and financial crime too. We've also seen an increase in kind of European coverage, and some of that is from contractors that are based actually in the UK as well. So they are remotely onboarded, and the top talent doesn't now have to work in Copenhagen or Paris. It can now be based in the UK, which has probably opened up a new candidate pool as well. Now we are seeing that some of the contract rates have dropped over the year. I think some of that is clients wanting to get a little bit bite back from people working from home, and across the board there's probably been a slight drop, especially at the senior end where there's been a few less opportunities. We are finding that IR35 is now coming back, second time round. It should be introduced in April. And we are finding that some clients are doing more fixed term contract hiring. We have our own PAYE payroll set up to accommodate clients that don't want to hire through limited companies. And so I think we've got kind of a plan of attack for 2021 as well. So final question, looking ahead, what do you think the outlook for hiring will be in 2021?
I think, first of all, I think across risk and compliance, I think it's going to be very similar to this year. There's no indication that it's going to tail off at all. And actually, I think there's more indications that it will increase with obviously increased demand across Europe, post-Brexit, increased regulatory demand. So I foresee an equally stable, if not even more demand across the risk and compliance sectors globally next year. I think notable points in relation to next year are legal. I think legal has had a tougher year from a recruitment perspective in 2020, but legal is historically the fastest growth sector of infrastructure post downturn. And as we come into more positive environment in springtime next year, legal absolutely will rebound. And I think the other notable point is an even further increased demand in the US and then globally from a regulatory perspective on the back of a change in US president. It's very well documented that the incoming president has more focus on increased regulatory demand, and whilst that won't be seen probably the first half of next year, that will really start kicking into effect the latter stages of 2021.
Do you think that retention rates will change because of a lack of movement in the market in 2020 and nervousness?
This is a very interesting trend from a retention and an attrition rate in 2020. So what we're doing is really working closely with our clients to try and make sure that through what is also going to be a challenging year, particularly the first half of the year, that we're absolutely giving our clients the right advice to both retain their top quality staff and at the same time, obviously attract the best of the external staff. And that's something we're working really closely with our clients on. Finally, I just wanted to say, obviously, from a Danos Group perspective, I've been so proud of our efforts in 2020. I think obviously we retained the best of our existing workforce, and we've supplemented the existing staff with outstanding new additions to the team in all locations. We will have had our best year ever since our inception, since 2004, and this is really all down to hard work. It's been a hard, tough year. Everybody's looking forward to a holiday at some stage, but the results have been there, and as I said, that's all down to the hard work and commitment of our growing workforce, and obviously look forward to more success with them into 2021.
Great, thanks for your time, Dominic.